Hello, my fellow silver stackers, and welcome back to Gold Rush Reporter. Before we dive in, make sure you hit the like button, subscribe, and leave a comment down below. I want to hear from you. What type of silver do you love the most? Or what price do you think silver will hit by the end of this year? Your thoughts could enter you into the conversation and help us grow this amazing community. Today, we've got some breaking news that's going to grab your attention because it's about silver. And yes, Elon Musk is now in the conversation. That's right. Elon Musk has made one of his most explicit posts about silver yet. And it's not just because the price of silver has reached a record high of almost $80 an ounce. There's something far more important going on, something that could impact industries, markets, and even your silver stack. Let's break it all down so you understand what's really happening. It all started when a post by Bull Theory caught Musk's attention. Bull Theory highlighted a massive issue. Silver is exploding in price due to a severe global supply shortage. Industrial demand is skyrocketing, and there simply isn't enough silver to meet those needs. This isn't new. It's been a problem for several years. But right now, it's being magnified in the markets, and that's why silver is trading so high. Industrial applications for silver are critical, from solar panels to electronics, and even electric vehicles. Summit Metals is ready to help anyone looking to buy or sell silver, so check them out for yourself. Elon Musk's reaction to this post? Simply put, this is not good. That's because silver isn't just any industrial metal. It's needed for the production processes themselves. Musk relies on silver for everything from Cybertrucks to starships, from server technology powering X to solar energy solutions. The significance of China's new silver export rules, going into effect January 1st, adds more pressure. Companies will now need government licenses to export silver, which could tighten global supply. And considering China produces 60 to 70% of the world's silver, this is a critical development. Now, while much of the silver used in industrial products comes from China, a large portion of the raw silver supply is mined in Mexico and Peru. Over the years, China has imported significant amounts of unrefined silver from these countries for industrial use. The combination of limited global supply, rising industrial demand, and export restrictions is creating a perfect storm for silver prices. Silver's role in EV batteries, solar panels, electronics, and other industrial applications cannot be understated, and the market is feeling the effects. It's no surprise that Musk's post gained massive attention, racking up millions of views in a matter of hours. Industry experts are chiming in too, highlighting that the silver market has been running a supply deficit for years, and 2025 is expected to mark the 6th consecutive year of this trend. The importance of silver is finally being recognized at the highest levels, and it's being openly discussed on platforms like X. This is a big deal because it demonstrates that silver is not only a critical industrial metal, but also an increasingly important hedge and store of value. The market is now paying attention, and more people are starting to understand why silver's price has skyrocketed. Even if supply tightens due to China's export rules, the industry will work to source silver from other regions. But the game has fundamentally changed. So, as we watch these developments, it's important to consider how this could impact silver prices in 2026 and beyond. Elon Musk knows its importance, and his post signals that strategic positioning for silver is already underway at the corporate level. The question for investors and stackers like you is how to respond and prepare for what's coming. Stay tuned as we continue to monitor this situation closely, and remember to leave your comments below about what you think Elon Musk's post means for the future of silver. Your engagement helps us bring you even more timely updates and in-depth analysis on the precious metals that matter most. Silver's industrial demand has never been more critical than it is right now, and Elon Musk highlighting its importance only confirms the intensity of the current situation. The fact that silver is trading near $80 an ounce is significant, but it's not the price alone that's grabbing attention. It's what the metal represents in terms of supply constraints and industrial necessity. Musk's response: "This is not good. Silver is needed in many industrial processes," signals that the major technology and manufacturing players are feeling the pressure. For Tesla, SpaceX, and other high-tech industries, silver is integral, not optional. It's used in EV batteries, solar panels, and other critical electronics, and the shortage could potentially disrupt production if not managed properly. China's new silver export licensing rules, effective January 1st, add another layer of concern. These rules require companies to obtain government approval to export silver, effectively restricting supply. While China produces roughly 60 to 70% of the world's silver, a large portion is mined in Mexico and Peru and imported for refining and industrial use. This means that even if raw silver exports are restricted, China's industrial output will still consume massive amounts of silver domestically. The global supply-demand imbalance is already pronounced, and these restrictions could exacerbate the shortage. This is particularly important because global inventories are at multi-year lows, and the expected deficit for 2025 is projected at 230 million ounces. The situation is further complicated by the fact that much of the world's silver is mined as a byproduct of other metals. There are very few primary silver mines, which makes it difficult to scale production quickly. If demand spikes further, as it's expected to with AI, EV production, and solar deployment accelerating, industrial users will compete fiercely for available supply. This creates an environment where prices could remain elevated or even surge further, especially if new supply channels can't be established quickly. Musk's companies, given their scale and reliance on silver, are likely taking measures to secure supply in advance, whether through long-term contracts, investments, or partnerships with mining firms. Elon Musk's commentary also serves as a signal to the broader market. When an industrial giant voices concern over a commodity, it's an implicit acknowledgement of systemic supply pressures. Investors and traders are paying close attention because the industrial use case for silver is increasingly tied to the tech and energy sectors, which are expected to grow dramatically. Unlike gold, which is largely a monetary hedge, silver's value is heavily influenced by industrial demand, and Musk's statements underscore that dynamic. Recycling and secondary markets will become increasingly important as well. If raw silver supply is constrained, manufacturers will need to source recycled silver from existing products. This will put additional pressure on the market, as recycled silver is more expensive and less readily available than newly mined material. The combination of export restrictions, industrial demand, and the limited number of primary mines creates a highly bullish backdrop for silver, at least in the near to medium term. The global silver market is entering a new phase where industrial necessity and strategic positioning intersect. Prices have already reflected the growing scarcity, and as production bottlenecks persist, volatility is likely to remain high. Market participants should closely watch developments in China, industrial demand forecasts, and corporate purchasing strategies. If companies like Tesla, SpaceX, or other tech giants are actively securing silver, this will further tighten supply for the broader market. For investors, this is a critical moment to understand the dual nature of silver, both as an industrial metal and a monetary asset. The current situation is unlikely to be short-lived, and 2026 could see continued upward pressure on prices, especially if the global supply deficit grows and industrial demand accelerates. The commentary from Musk highlights that silver's importance extends far beyond market speculation. It is a vital input for the technology driving tomorrow's economy. The silver market is at a turning point, and Elon Musk's recent statements only reinforce how critical the metal has become for industrial applications. While many people focus solely on silver as an investment or monetary hedge, its industrial demand is driving the current price surge. From EV batteries to solar panels, from electronics to advanced manufacturing, silver is irreplaceable in many high-tech processes. Tesla alone consumes significant amounts of silver in its EV production lines and energy storage systems, while SpaceX requires it in satellites and spacecraft electronics. Musk's acknowledgement that restricted supply would be not good highlights that even the most advanced companies are sensitive to silver shortages. China's new export licensing rules, effective January 1st, are another key factor. By restricting silver exports to state-approved companies, China is effectively controlling a large portion of the world's supply. While most raw silver comes from Mexico and Peru, a large volume is imported into China for refining and manufacturing, and a significant share of the final products uses silver intensively. The regulatory changes may not directly stop global production, but they could tighten available supply, forcing industrial buyers to compete for limited metal. This adds a structural scarcity element to an already tight market. The global supply deficit is another concern. Inventories are at multi-year lows, and the projected 2025 shortfall of 230 million ounces illustrates how the market is struggling to keep pace with demand. Industrial requirements are the primary driver here. Unlike gold, which is largely influenced by investor sentiment and monetary policy, silver's price action is heavily linked to physical consumption. When industrial users like Tesla or major solar manufacturers forecast shortages, they adjust procurement strategies, locking in supply well in advance. This behavior can exacerbate market tightness and push prices higher. Another complicating factor is that most silver is mined as a byproduct of other metals, such as copper, lead, and zinc. This makes it extremely difficult to rapidly increase production in response to rising demand. Primary silver mines are rare, and scaling production takes years of investment and permitting. As industries push for more silver, the competition will be intense, and only those with strategic foresight, like Musk and his companies, are likely to secure significant quantities before the general market feels the squeeze. Recycling is poised to become a critical component of silver supply in the coming years. If raw silver becomes constrained due to mining limits or regulatory changes, manufacturers will increasingly turn to secondary sources. Recycling silver from electronics, solar panels, and industrial waste is feasible but costly. This creates upward pressure on prices, as recycled silver carries a premium compared to newly mined material. Musk's public acknowledgement of silver's importance signals to the market that industrial demand is unlikely to slow, which in turn strengthens the bullish narrative for silver. Investor perception is also shifting. When a high-profile industrialist like Musk voices concern over silver, it validates the metal's strategic importance beyond monetary or speculative appeal. Traders and investors recognize that industrial demand is a real, tangible factor, influencing prices, not just market sentiment. The dual role of silver, both as an industrial necessity and a monetary asset, creates a unique investment environment. Prices are being shaped by production limits, industrial usage, and strategic positioning by major corporations. Looking ahead, 2026 is shaping up to be a critical year. Even if silver prices retreat from current highs, the underlying structural factors remain. Supply constraints, industrial demand growth, and strategic procurement will continue to define market dynamics. The comments from Musk, along with industry observations, suggest that companies are preparing for a world where silver is not easily obtainable, and prices will reflect that scarcity. In essence, the silver market has entered a new era. No longer is it just a trading commodity or an investment hedge, it is a crucial industrial material with strategic implications. Elon Musk's statements amplify this reality, and anyone involved in silver, whether as an investor, manufacturer, or policy analyst, needs to understand the interplay between supply restrictions, industrial demand, and global market forces. The supply-demand imbalance in silver is only becoming more pronounced, and the market is entering a period where industrial consumption and strategic hoarding will define price action. Elon Musk's public acknowledgement underscores a critical reality. Silver is not just an investment metal, it is a fundamental industrial resource, essential for advanced manufacturing, EV production, energy storage, and aerospace technologies. Tesla's reliance on silver for its EVs, solar panels, and energy storage systems illustrates the scale of industrial demand, while SpaceX's spacecraft and satellites require precise, high-quality silver for critical electronics. When someone like Musk identifies a potential shortage as a problem, it sends a clear signal to the market that industrial players are actively monitoring and responding to supply constraints. China's new silver export licensing regulations, coming into effect on January 1st, add a layer of structural risk. By limiting silver exports to government-approved firms, China is consolidating its influence over the global silver supply chain. While the bulk of raw silver comes from Mexico and Peru, much of it is refined and processed in China before entering global markets. This means that even if raw production is unaffected, downstream availability for industrial users outside China could tighten. Companies like Tesla, SpaceX, and others dependent on high-quality refined silver may need to secure long-term supply agreements or diversify sources to mitigate exposure to regulatory constraints. The market may react by pricing in this scarcity, further pushing silver toward higher levels. It's crucial to recognize that silver production is fundamentally constrained. Unlike gold, which is often mined as a primary metal, most silver is a byproduct of copper, lead, and zinc extraction. Expanding production is not as simple as opening new mines. Doing so requires multi-year investments, permitting, and infrastructure development. Primary silver mining is limited, and scaling production to meet surging industrial demand is almost impossible in the short term. This inherent scarcity, combined with rising demand from high-tech industries, creates a perfect environment for upward pressure on silver prices. Recycling is emerging as a strategic response to these constraints. As industrial demand intensifies and raw silver becomes less accessible, companies will increasingly rely on recycled silver from electronics, solar panels, and industrial waste. Recycling, however, is costly and cannot fully replace the volume of silver required by industrial expansion. Consequently, recycled silver carries a premium, reinforcing bullish pricing dynamics. Musk's recognition of silver's industrial importance highlights that strategic procurement, whether via primary production or recycled sources, is already underway among industry leaders. Investor sentiment is being reshaped by these developments. When a high-profile industrialist publicly acknowledges silver's strategic role, it validates the metal's dual importance, as both a tangible industrial commodity and a store of value. Market participants now understand that industrial demand, rather than speculative hype, is the primary driver of the current price surge. The dual function of silver, industrial necessity, and monetary asset, creates a complex but compelling investment environment, with prices increasingly reflecting supply constraints and strategic positioning. Looking toward 2026, the silver market is poised for continued volatility, but the underlying fundamentals suggest that industrial demand will remain robust. Even if prices temporarily scale back from the current highs, the structural scarcity, regulatory influences, and strategic accumulation by industrial players will sustain a bullish backdrop. Companies that secure silver through diversified sources or long-term agreements will hold a competitive advantage, while latecomers may face significant price premiums. In summary, Silver has entered a transformative phase. No longer merely a speculative investment or monetary hedge, it is now a critical industrial resource with far-reaching implications for high-tech manufacturing, energy storage, and aerospace applications. Elon Musk's recent statements underscore the urgency of securing silver, and industry participants are taking note. The combination of constrained production, increasing industrial demand, and strategic accumulation ensures that silver's market dynamics will be fundamentally different from past cycles. We now arrive at the culmination of the silver story as it relates to Elon Musk, industrial demand, and the evolving global market. Silver is no longer just a metal for coins or collectibles. It has become a cornerstone of high-tech industrial applications, from EV batteries and solar panels to spacecraft electronics and AI-driven industrial infrastructure. This dual role, both industrial and monetary, makes silver uniquely positioned for price appreciation, but it also introduces layers of complexity in supply, regulation, and market behavior that investors and industry players alike must navigate. One of the most important developments to consider is the upcoming enforcement of China's silver export licensing rules. Effective January 1st, companies will need government approval to export silver, consolidating control over a large share of the world's refined supply. While raw silver production comes mainly from Mexico and Peru, a significant portion of it is refined and processed in China. This regulatory change may tighten availability for industrial users outside of China, creating strategic urgency among companies that rely heavily on silver for production. Firms like Tesla and SpaceX are likely already planning or have implemented measures to secure silver supply, either through direct contracts with miners, stockpiling, or partnerships with industrial suppliers. Production constraints make this urgency all the more pressing. Most silver is a byproduct of other mining operations, meaning primary silver mines are limited. Scaling production to meet rising industrial demand is a multi-year challenge involving exploration, permitting, and infrastructure investment. Unlike other commodities that can see a rapid surge in output when prices rise, silver production is inherently inelastic in the short term. This scarcity, coupled with intensifying demand for high-tech applications, provides a structural underpinning for sustained upward price pressure. Even recycled silver, while helpful, cannot fully offset the deficit from primary sources, and the cost of recycling adds further premium to the metal. Industrial adoption of silver continues to accelerate. EVs require silver for conductive components. Solar panels rely on it for photovoltaic cells, and AI-driven technologies demand efficient electronics that often incorporate silver. As automation and industrial modernization expand globally, silver's industrial footprint is set to grow. The convergence of technological growth, energy transitions, and the industrial use of silver makes it an essential commodity for the next decade. Elon Musk's acknowledgement is not merely symbolic. It reflects strategic positioning by industry leaders who understand that securing silver is essential to operational success and long-term resilience. From an investment perspective, these developments suggest a shift in market psychology. Silver is increasingly being valued not just as a speculative asset, but as a scarce strategic resource. Price movements are likely to reflect real-world supply-demand imbalances rather than short-term speculative trends. Even if a temporary pullback occurs, structural factors, including limited production, industrial demand, and regulatory shifts, support a bullish framework over the medium to long term. Investors who can anticipate supply constraints and monitor industrial demand trends may benefit from informed positioning in both physical silver and industrial-focused securities. Looking ahead, 2026 is shaping up to be a pivotal year for silver. As industrial demand rises and regulatory pressures create tighter supply dynamics, prices may experience renewed upward momentum. Strategic accumulation by corporations, coupled with recycling and alternative sourcing efforts, will create a complex market landscape where supply is constrained but demand continues to grow. Silver is evolving from a passive commodity to an active, critical industrial resource. In conclusion, the silver market is entering an unprecedented phase. Regulatory changes, production constraints, industrial demand, and strategic accumulation by influential market players like Elon Musk are redefining the fundamentals. Silver is no longer just an investment or hedge. It is an indispensable industrial input, and its value is increasingly tied to real-world utility. Understanding these dynamics is crucial for anyone involved in precious metals markets. As supply becomes more constrained and demand continues to escalate, silver is poised to play a decisive role in industrial growth, technological innovation, and strategic resource management. Financial disclaimer: this content is for informational purposes only and should not be considered financial advice. Always conduct your own research, DYOR, before making investment decisions in silver or any other commodities.